All right, beating down growth stocks that I think are opportunities. The first one on the list is Roblox. Now, I've talked about it several times. There's several videos on the channel that go deeper dive. Subscribe, go take a look at those. We brought Roblox to YouTube before the direct listing. It wasn't an IPO, it was a direct listing. It's actually up today almost 4%. It's at $89. This thing is still beaten down from its highs. The market cap right now, guys, $48.84 billion, you can see over here. And what I wanted to do in this video is focus on companies that really had hyper growth, 100% or more year-over-year revenue growth. And you can see these guys, 102.19% year-over-year revenue growth. And that's off of hard comps. Remember, COVID was very difficult for these guys. So negative 14.53% profit margin, which is not what we want to see in this type of market. We want to see profitability, but this does have a path of profitability. It is popular with institutions when you think of the metaverse play. And speaking of metaverse, one thing I want to show you before I show a chart. So you're going to want to see this video in its entirety because it's jam-packed with information. So I think this could be huge. Teaching in the metaverse. Roblox looks to make that a reality. If you look at this, guys, they want to expand their presence in K through 12. That makes a ton of sense when you think of the demographic for Roblox for the most part now. So hoping to expand its presence in K through 12 schools, gaming company Roblox announced a $10 million fund to support creation of online learning, a unique way of letting users play, explore, and socialize in an endlessly evolving digital world, a virtual world. So that really sums up the metaverse, and be able to take metaverse not just for gaming, but use it for real life applications like school and work and things like that could be huge for companies like Roblox. Like a lot of stocks in the last year, this has been a roller coaster. It was a direct listing early 2021. It hasn't been around for quite a year publicly. Got up to $103, came back. In Discord, it was a buy at $65 and $75. I told the gang not to chase this one. If you're interested in joining our exclusive community, check out Patreon, Fired Up Wealth. There's actually a few different ways to join us in Discord. There's a link in the description below. There's several different options. We're running some specials and promotions right now for another couple of days. So check that out, guys. But this thing did end up coming back and then ripping up to 141 when the whole metaverse, craze started happening and got all hyped up, got to 141 and it's come back, and you see it's bounced really nicely. It's interesting because it didn't quite get to this yellow line, which should have been kind of that retest area from November, December of 2021. But I think people came in and said, you know what, this is close enough to a retest, I want to buy. Could this thing break down and come back to the yellow line here? Yeah. Could it go lower? It always could, but this one is much more in favor when you think of that Wall Street fashion show than some of the other hyper growth stocks. So check out Roblox, guys. I think it's an opportunity if you can get it. The closer you can get it to $75, the better. But anything under $100, I think this thing will be at least $120, $125 in 12 months. So it's got 25, 30% upside, in my opinion, from here. I'm not a financial advisor, but that's what I believe. The next one, guys, is Digital Turbine. Ticker is APPS, APPS. Market cap, $5.2 billion. You can see over here. P ratio, so it does have the earnings, right? So you got the P ratio, price to earnings ratio 100, which is expensive, but check this out, 337% growth year over year. And again, on hyper growth stocks, you're not using PE ratio. The reason I mention it is anything that has earnings is going to be more favorable in this type of environment with interest rates, with inflation, 10-year treasury yield going up, the BIPs going up, et cetera. So we're trying to find companies that are hyper growth that could still do well in 2022. And this thing actually has a pretty amazing growth, 337% growth. So definitely want to check out. You can see this thing is ramped up nicely. I want to show you here on their last earnings call, accelerating and efficient growth. So you can see revenue, adjusted EBITDA, you got the non-GAAP EPS, everything is just ramping up nicely for this. It's a good time to invest in this stock, and I'll show you a chart here in a second, but we've only just begun to tap a large growing market. So their TAM on this presentation here, they're estimating in 2025, this is 540, that's $1 billion. So mobile ad spending, these guys are focused on mobile ads, $540 billion total addressable market. That's the total addressable market for everyone, including competition. If you look on the left-hand side, you've got Google and Facebook representing about 190 billion of that current market share. The rest is around $50 billion, but you saw this is a small market cap. And there is competition, but this one does have a moat in specific areas. If you want a deeper dive on a stock like this, drop a comment below. We're not going to have time to go too deep in these stocks today. But again, drop me a comment if you want a deep dive on one of these stocks, and I'll take care of it for you. Okay, so another one, guys, $102 in March 2021. You can see it just slowly grinded lower and lower and lower. It finally popped that whole September to November run. We had a pretty parabolic run in some of these names. It didn't quite get back to that $100 range, but it got to almost $94, came back to 45. Now it didn't retest the area. I said it was a buy here in December at 45, and we added some in Discord. Again, join us. You will not regret the decision. You can join us for a month. If you don't like it, you cancel. But I'm telling you, it's a great investment. The amount of money that you can make and save by just have a better idea of where to buy these stocks and have a community of like-minded investors that are trying to do the same thing as you, outperform the market and achieve financial freedom. If you're interested in that, check it out. But you can see on the S2 here, it didn't get to the S2. It decided to go to the S1, so it bounced nicely off that S1 right there. I think it's an opportunity in this range. I love it below $50. I still like it in the 55 range. And no, it could always go lower. This thing could go to $30, $40. You never know what the market's going to do. But risk reward here, if you can get it around 50 bucks a share, in my opinion, you're a long-term investor. I like this stock a lot. Now, Upstart, I've covered a ton on the channel. If you want more information, more research, subscribe, take a look at some other videos. Just real quick on this one, market cap now is under $10 billion at about $9.58 billion. It's trading at 119. It was actually lower yesterday. It's popped up nicely, so it looks like it's starting to recover. My cost basis is higher than this. I thought it was a buy, 200 below, and it got almost to $100 a share. You can look at the growth in this, guys, 242% growth. And again, this is one that has earnings, so 12.73% net profit margin. This is what you want to see in this type of environment. Now you look at this, PE 145. So it's an expensive stock. It's going to get hit. Wait till you see the chart. This thing's down. It got down over 70% from its highs. Okay, so the first video we did, this was part of the top AI growth stock series. If you have not seen that, there's a playlist on the channel. Go to the homepage, look for top AI. There's top high growth. There's 12 stock picks in there, and check it out. Upstart was on there. And we said in that video that it was going to break out from $100 and go $300 plus, and that the RSI was overbought. But I said I probably wasn't going to get into it at that time. I just wasn't completely sure. Well, we've had a couple earnings and I've been able to do more research on it. And I do believe in this stock. I have conviction in it. $401 is what it got to. So it ran literally from $100 to $400. And if you zoom the chart back even further, guys, and if I do an all chart, you can see down here, guys, this thing just started trading the end of 2020. And at that time, it was roughly $25 a share. And it rocketed from $25 to $165, pulled back. It's been kind of up and down. But you got to remember, in late 2020, this was a $25 stock and it went to $400. So you had a multi-bagger in a very short period. It ran too hot, too hard, too fast. I think it's an opportunity here. I said 150 it could go to. I didn't think it was going to get quite as low as it did. The thing almost got to $100. You can see this yellow line here. It looks like it's bouncing nicely off that. If it does go lower, if it goes lower than where it's at now, I circled this here. This is where it could go if it wanted to go even lower, and that's a floor of like $80. I don't think that's going to happen, but I didn't think 150 was going to happen either. I always like to dollar cost average these. Don't buy everything out at once. If you want $10,000, you buy $2,500 and you do it, 4 or 5 times, $2,000, $2,500, and buy in different lots. But at this point, if you don't own any of this, you might want to be a little bit more aggressive. I can't tell you what to do. I'm not a financial advisor, but if it were me and if I got $108, I might go 50%. And if it runs, it runs. If it pulls back, the risk reward on Upstart, where it's at below $120 a share, in my opinion, it will grow into its valuation very quickly. And I think these guys have a lot of room to run if you're a long-term investor. So SentinelOne, now this one I've done several videos on as well, compared it to CrowdStrike. I still really like CrowdStrike. I think that CrowdStrike is best of breed endpoint security, but I think both stocks, both companies can do well, and I've said that over and over again. Now this thing has already bounced nicely from the bottom yesterday, so the opportunity might be missed, but I want to show you a chart at least of where it would, in my opinion, be an opportunity to add. You can see the market cap on this one's $11.75 billion. This one is going to be a little bit riskier just because it does not have any path to profitability. It's got a negative 122% profit margin with 128% year-over-year growth. So the growth is really good. This profit margin, there's room for improvement there, guys. So definitely be careful with this one with SentinelOne. Let's look at a chart. Okay, so you can see IPO in July, rocketed to 73, came back to 50, rocketed to 78, came back to $43, kind of retested that range, even broke it a little bit. The low is right around $40. You can see when it gets to $40, you see that long lower shadow on this candle, that candle wick, I mean. You can see that just, it gets down there and buyers come in pretty quickly. And you can see it's this rally. This is a really, really bullish candle right now, heading back to $50. So yesterday, this would have been the opportunity, around this range. If it does retest this range or break it, in my opinion, guys, I would like this stock in the high 30s, like 35 to 40. But the reality is sometimes when there's enough demand, you're just not going to get it. So people are still going to pay some premium for growth. This one does have some pretty extreme growth metrics. Cybersecurity is a secular growth trend. So this one is also in that Wall Street fashion show, hedge funds, institutions, things like that do like to buy this stock. And that's really why it's on the list, because I think it can recover. And I think by the end of the year, in 12 months, I think this stock will be higher than $40 a share, which is why it's on my list. This one, guys, in Discord, I told the team, I told the community, expect it to be under $300 in the future. Here you go. This one's also recovering nicely from the lows yesterday, but it's at $250 a share. The market cap on this one is just around $10.5 billion. It does not have a P ratio, so be careful with this one. This is another SaaS name. This one has 94%, so it has really the lowest growth. If you look at last quarter, year-over-year revenue growth, 94.91%, almost 100%, but not quite. The net profit margin is negative 34%, but this company is doing really well. And if you want a deeper dive on this one, I'm willing to do it as well. Let me know, drop some comments below. So you can see around December, guys, we did a chart day, and we do chart day every Wednesday in the community. Join Patreon if you're interested in doing those every single Wednesday. The team gives me tickers, symbols, and we look through charts together, a live stream that's recorded. I said that under $300 was possible later, and that I would probably wait. And if you did wait, this is probably your opportunity here. You can see it bounce nicely. In fact, it got down to around $220 a share, and you can see it's bounced nicely off that to close to $250 a share. So in this area, it looks like buyers want to come in. This is another one that's a newer IPO. It's been hit pretty hard from its recent highs. Had an IPO basically in spring, and it kind of traded sideways. It rocketed then all the way up to $425, pulled back to $317, rocketed again to $450. And then it's just made this, downtrend. You can actually draw a trend line. So this is imperfect, but look at this, 450, 419. It kept making lower highs and lower lows, which you don't want. That's just fading lower and lower. If you draw that line straight down, you're basically where the buyers came in yesterday. And it doesn't always have to work perfectly, guys, but I will say, it's just like Fibonacci, history likes to repeat itself. There's a lot of symmetry and geometry sometimes when you're doing these charts and reading these charts. And at the end of the day, this thing can always go lower, but this makes sense to start buying in this $220 range. If I'm a long-term investor and I can get it in that price range, I think this is an opportunity. At $450, that's pretty expensive, right? Getting it back down here at this price, I think it's pretty attractive. Now, I do have a 6th pick. It's going to be a bonus pick. It's going to be exclusive to the Patreon Discord members. This is a thank you for all of their support, over the last couple of years building the community. If you guys want to join us and just check out the community, go to Patreon, Fired Up Wealth. Check us out, guys. Try us for a month. If you don't like it, you can cancel anytime, no strings attached. Everything's handled through Patreon. I don't deal with any of the payments, anything like that. It's a great community. It's worth every penny. It's investing in you, investing in your future. So if you're interested in checking out that 6th pick, guys, just go join us on Patreon. Any tier, I'm going to give it to everybody, anybody that's a patron. Thank you for your support. And it's just going to be a short video like this. So it's another 3 to 5 minute video on a bonus stock that I've never actually talked about on the channel before, that I think has a lot of potential, especially at this price range. Thanks for watching. Hit the like button, drop me a comment, go check out Patreon. Appreciate you guys. Have a great rest of your day. Take care.